Hey, what's up, everybody? Thanks for getting back together with us. We got another exciting episode of Wall Street Saturday. Just trying to find some opportunities that are going on, mostly in the macroeconomic environment. I just want to introduce myself. I am Josh Flores.
Misael Gonzalez.
And I'm Joshua Trusty. So today we're going to be taking a look at TQQQ, and two of its constituents had a really interesting week, which greatly affected the ETF. And those two constituents are Amazon as well as Meta, commonly known as Facebook. So I'm going to share my screen and we're going to get into those details from the earnings calls. Okay, so these earnings calls went pretty differently for both companies. Meta actually lost almost a quarter of its value following its earnings call, but Amazon gained about 15%. And so when we dig into the reasons for this, one was just that for both of these stocks, the revenue versus the expectations that Wall Street had were pretty much on target, more or less. So Meta basically beat a revenue by about 0.69%. Amazon beat revenue. Lost or had failed to meet expectations by about 0.13%. So both of these are within 1%. So they're not really a huge part of the narrative when it comes to why these two stocks behaved the way that they did. EPS for Meta was subpar versus what was expected by about 4%, but Amazon had a monster quarter for Q4 2021 and actually beat their EPS that was expected by a factor of 6.5. So they had made over 6 times more revenue than what was expected. So that was really, really good. And to give a bit more color for what was happening, one thing to consider for Meta was that their average price per ad was increasing by about 24% year over year. And so that is one tailwind, but obviously it doesn't explain why they actually reduced their earnings call, reduced their stock price that day. In addition, just to mention more of the tailwinds, Mark Zuckerberg announced that the expected 2020 expenses were cut by about $2 billion. So those 22 expenses were expected to be as high originally as 97 billion for this year, but now the maximum expenses that are expected are going to be about 95 billion for this year. But to actually understand why they underperformed, there are several different key headwinds that we should take into account. One is that about $10 billion, according to Meta, was lost due to Apple's new privacy policy. So this new privacy policy allows users allows users to kind of opt out of being tracked. And so this lack of information makes it more difficult for Meta to target people with ads. So if you already say you have some information on how a person typically behaves on the internet, they go to all of these different stock investing websites. So being able to identify that person when they're visiting a website will allow advertisers to target them with more ads. So that kind of a lack of specificity has really been hurting Apple this past quarter. In addition, one thing that Apple had mentioned, that Meta had mentioned, was that users are moving more towards what Facebook calls video services. So different ways of sharing video content. And for example, one of those is what they call Reels. And those end up being less profitable than other forms of content that are on their applications like Facebook. Zuckerberg also mentioned that there was increased competition for people's time. And this is kind of a nice way of saying that TikTok and Snapchat and other social media websites are digging into Facebook's profitability. So those three different things are not so good for Facebook's profitability moving forward. But for Amazon, there were some really, really good tailwinds. One was that actually the major one, the prime rate was announced to be increased to $139 annually. So many of us use Amazon Prime, which gives you access to Amazon Prime Music, Amazon Prime Video, to watch shows like The Expanse, as well as faster shipping. So a lot of people own it, purchase the service, and now it's going to be increased over to by about $20 to $139. However, I would also mention that this is actually kind of an understatement. So nominally speaking, for many subscribers, about 48% of them, these subscribers actually are paying on an annual basis. So they're paying that, they're going to pay a flat rate of $139 annually. However, the price for people who are subscribing on a monthly basis is actually higher if you annualize it. So they're also going to see a price boost as well. So overall, if you take into account the fact that most people are actually purchasing Prime on a monthly basis and combine that with people that are purchasing Prime on an annual basis and combine those two prices, it actually ends up being that their Prime rate is in effect going to increase to about $160, which is significant. So the headline is that the Prime rate is going to increase to $139 annually, but realistically speaking, that's really going to be $160 every year. So that's very good. In addition, not everyone knows this, but Amazon also invested in Rivian, which is an EV startup, and that investment has appreciated in value. So that has also have boosted like the amount of income for Amazon by about $12 billion, because of that value appreciation. One thing to note is that this is not operating income at all. So, for example, operating income is an income that you make that you can use immediately to spend on something else, like say purchasing more trucks to deliver Amazon goods. In this case, they just own a stock, so that's not actively helping them to manage their business. In practice, it does mean that their value has increased. So, for example, like our stocks, these are things that are like you're not going to immediately liquidate a stock just because like the value has gone up. You're going to keep it in your account to stay long, so you can continue making more money. And that's exactly what Amazon's going to do here. There were just a few minor headwinds that are to keep in mind for Amazon. One was that there were a higher labor cost during the holidays. So that was pretty much limited to Q4 2021. So that's not really a longer term headwind. And that's also a good point of comparison too, between Meta and Amazon. So for example, that $10 billion that's been lost due to Apple's new privacy policy, that's going to be an ongoing loss for Meta, versus Amazon, where they might take a hit maybe once every single year versus continuously throughout the year due to higher labor costs. In addition, I think one other good points of commentary between Amazon and Facebook or Meta is that these companies are not really what we think they are as consumers. So for example, a consumer might be thinking of Amazon as just like a retailer, so that they're shipping you different products from different stores, and that's what they do. So you just like buy something on Amazon and you get it the next day or even the same day. Or Meta is basically a company that where its future is in social media. And today Facebook is mainly known for social media. Meta is known for its Facebook product. However, that's actually not where they're going in the future. One of the things that Mark Zuckerberg, the CEO of Meta, is trying to do is actually push Facebook more towards the metaverse. So, which is why the name was changed from Facebook to Meta. And in fact, their ticker is going to be eventually changed as well to Meta, ruining the incredible acronym of FANG. Unfortunately, that will come to an end. And in addition, Amazon is actually, they are a retailer, yes, but that's not really where most of their profit margins come from. In fact, they have basically very razor thin margins when it comes to retail. So even though they have almost a monopoly on that, they're not really making that much money in terms of their balance sheets from like that retail business. So where they actually are making more money is mainly from things like Prime or from AWS. So, which is basically a service where they can like host like a different like web services for various companies. So those are actually very profitable for Amazon. And so the future of Amazon really, it doesn't lie with retail so much. And the future of Meta, which commonly known as Facebook, doesn't really lie as much like with social media. In fact, these two companies are actually staking their futures on things that are slightly different from what people normally think about them as. So the future is going to look significantly different for Amazon and Meta. And one thing to note is that Amazon is staking more of its future into EVs, like with its investment in Rivian, which is already known to be profitable. And Meta is taking a future into the metaverse, which is not as of yet profitable. There's no major company that's already profitable just by exclusively working in the metaverse. So I think that's like one key difference, which explains why Amazon and Facebook perform so differently. Like Amazon already invests in something that is which was previously considered kind of like a bleeding edge, like EVs, and now it's just the current thing to invest, a really hot topic. And Meta is going to be investing continually more and more and more into the metaverse, which isn't yet mainstream. It's still really, really bleeding edge. So I think that gives like a bit more color to why these two different companies performed so differently this past week in their earnings calls. And unfortunately, this information isn't exactly actionable for TQQQ or QQQ, mainly because if you own TQQQ or the Nasdaq, basically you own both of these, and they're all wrapped up in the same basket of stocks, in the same ETF. So I think this is indicative of the fact that if say like Meta goes down, but Amazon goes up, you won't necessarily see like a catastrophic loss in your portfolio if you're owning TQQQ, because investing in an ETF helps to balance out the different things that are happening at the stock level, so you can just basically benefit from a boost in the overall industry that these different stocks are in. So with that, I will also open the floor to some more discussion from the other analysts on the show. And what do you guys think about how Amazon and Facebook performed this past week? Was there anything that was really shocking to you in the earnings call, or how do you think that their future is going to fare?
Yeah, I mean, I think it's a story about diversification. Obviously, Meta, their main source of income is ad revenue. And as you very wisely pointed out, now if you have an iPhone, you can ask the apps not to track, which means that they can't share information from one app to another. And obviously, when that happened, I think that there was a warning out there that there were going to be some impact to the revenue Facebook, and now we're seeing the results of that. So yeah, really hoping that Facebook or Meta can get their game together in terms of pushing the Meta platform and trying to develop that and be like a leader. They have an opportunity to do that since they own Oculus and other things like that. And then in terms of Amazon, you can see here, I mean, how the revenue kind of stayed flat year over year, but the EPS did grow 6 times, versus the previous quarter, I'm guessing. And that's probably attributed to the Rivian investment. And usually, Amazon, Jeff Bezos and Elon Musk, CEO of SpaceX, don't really get along, and they're always fighting to get to the, gain market. So it's not a surprise that Amazon is investing in one of Tesla's competitors, in this case Rivian. And in terms of Prime, I think we can actually see high labor costs. We know that high labor costs translate into higher prices for the customer, and we can see that how Amazon is raising the price for Prime to $139. So very, very cool story, and we'll have to keep track of how this is going.
Yeah, I was going to mention, I know that there was like 3 big topics here, and I think that my time listening, I was really just kind of thinking about the future state of Facebook, Amazon, and even TQQQ, because I think I can actually find reasons for bulls in each one of those cases, despite the craziness that's kind of going on in this market right now. Like you guys have both kind of mentioned about like the ads in Meta / Facebook. And like how you were pointing out, Josh, that they're actually just not necessarily like a social media company. I've always kind of looked at Facebook as being more of a marketing agency than anything. That's how most people, small businesses, use that to get out and reach as many people as they can. I mean, I'm sure that's a step that we're going to take eventually. We're going to be using that platform. But like you were kind of mentioning, I think that we're seeing TikTok and Snap kind of like come up on there. And I did see that Snap had their earnings this week too, and they actually did like pretty good. Did a lot not just like with their financial statements, but with their stock performance as well. I mean, they did have like a hiccup in the week, but they've seemed to return it this week. But I think that might be one of the reasons why Mark Zuckerberg is trying to pivot his company. I mean, he's really almost starting a brand new company trying to get into this metaverse, and I think that's something that we can discuss too on like another call, because we can have like a whole class about the metaverse and everything. But that's definitely something to look into. And speaking off of that too, Amazon, we were kind of speaking about like the future state of that. I know that they're actually in talks. I think Nike too. I don't know if you guys have heard this, but they're actually thinking about acquiring Peloton, which might be another big thing. But the biggest thing that we need to really recognize is AWS that you pointed out. At my firm, and I'll refrain from saying the name at this moment, but at my firm, AWS is like a huge component of what we do, and AWS actually integrates blockchain into what they do as well. And so, of course, that too is a class in and of itself as well. And so, the future of blockchain is definitely within Amazon, and yeah, Amazon has some great services with like the Prime, and like you can buy just about anything on there. But the business to business like deals that they have going on there, some giant companies, I mean, Fortune 10, Fortune 20 companies are using AWS in this. And so I think there's actually big opportunities in both. I mean, Amazon's a big stock, right? Like, I don't even know. I think the last time I saw it, maybe would have been $3,200. So owning just a fraction of it would just be fine. But I think that there's definitely room in there. But when looking at TQQQ, I see that it's actually below 60 right now. And that's actually like a crazy good price. Looking at the 52-week high, it was 183. So that's like a very big gain and a very big opportunity. And again, like again, I don't want to say anything too crazy, but I mean, this is the US stock market we're talking about. We're talking about what I believe is the greatest country in the world, has the greatest leaders in the world. And I think the NASDAQ will again go back to 16,000. I think we'll have an all-time high at some point within the next 2 years at least, And so like we always say, this downtime that we have right now, it's not really a downtime. It's just an opportunity to get in. And so I too will look to increase my shares in Facebook, Amazon, and TQQQ this week.
Yeah, for sure. I mean, AWS is a monster. If you look at how the revenue is divided for Amazon, I think they get 8% of the revenues from AWS, while maybe 20 or less is due to Prime, and vice versa. Like 80% of their expenses is due to Prime, while 20% of the expenses is attributed to AWS. So it is a machine that seems to be unstoppable.
It gets my bold stamp of approval.
Yeah, and I think like one other thing to comment on is that both of these companies are not experiencing necessarily growing pains, but really maturity pains. So for example, Amazon is basically the king of retail. They really have like expanded there, but there's not, even if they were to expand more, the margins aren't so favorable. So further expansion won't necessarily help them. They just really need to maintain like their status and use retail as a way of getting customers more familiar with like other services, so that maybe a customer isn't just purchasing things like on their platform, but they're also getting onto Prime, which now has like a much better profit margin than it previously did. In addition, Meta is also pretty much grown in terms of their Facebook website almost as much as they possibly can. Pretty much everybody is on Facebook at this point, but now they're getting competition from other people. So the Facebook is a really mature website, but the landscape that it's in of like social media is perpetually young. There's always like a new younger generation that's more than willing to switch to another website. And so I think Facebook is looking to get like some more stability by moving into like a totally new space, which is basically the metaverse space. And hopefully for them, they'll be able to create like the infrastructure that they need to. And actually, that's the last quarter, they spent over $3 billion on the metaverse. They're aggressively trying to build out that infrastructure, especially with hardware like Oculus, like you mentioned before, Josh. So Yeah, I think this is ultimately a story where two mature companies are trying to expand into different areas. Amazon with Rivian in the EV space, as well as trying to bolster its offerings in AWS as well. And of course, like for Facebook becoming Meta, becoming a company that's focused on the metaverse. So if you want to keep up that growth rate, you have to expand it to different areas, because a lot of these, both these companies have really like already gotten as much as they can of in terms of market cap out of like some of like the spaces that they're already in. So they basically need to go into like some additional areas of revenue. For TQQQ, these companies are innovating. They're not just like sitting on their laurels and just hoping just to get by and then becoming a dividend stock. No, they're continuing to pursue aggressive growth. So even though Meta might be down for a bit now and have taken the TQQQ down a little bit on that day when Facebook wasn't doing so well, it's important to just like keep that long-term view. These are very good companies, and they will continue to grow, and they are aggressively doing whatever it takes to see like more growth in the future. So don't sell, stay long, stay green.